All right, hey everybody out there, how you guys doing? So listen, this is my old chart that I did all the way back here, right? I did this chart all the way back in, oh my God, October 2018. Actually, I think I did a little bit sooner. I called the top absolutely freaking to the money, right? Uh, and then I missed the bottom. I was shooting for this 15% retracement area. We did retrace a little bit more, a little deeper, so we definitely retraced a little bit deeper. But I called this inverted head and shoulders, which was freaking perfect, right? This inverted head and shoulders played out absolutely money. Look at it, even teed that puppy off right to the tippy top there. Look at this bad boy. Oh my God, can it get any better than that, right? So this is old chart. Here's all of my reflections that were back in 2018. This is why I did this. This is why I called this, right? In recession, gold dumps with the markets. Gold is not dumping. I called all this the U.S. economy strong, which it is. This is all old stuff back in 2018 in October. The world economy is shit to soft, exactly like it's sitting today. Looking at the world economic news coming out of Germany, soft and shit. Look at just the EU, soft and shit. And I want to say it's more like soft shit compared to anything else that's possibly out there. You've got a lot of really troubled things that are going on in the world economy. You guys have the Chinese. We have the Chinese trade war that's going on. Let's see what I've got. I had the currency, right? The currency, the U.S. dollar. The U.S. is holding the dollar down to make U.S. goods cheaper. Employment is tight. Yep. Wage inflation still going on here, man. Wages are still slowly climbing up, right? Because the job market is so good right here. It's impossible. It's just crazy. Uh, the macroeconomy was good, which it has been. Housing has been risky to bearish. Nailed that, as we all know, the housing economy. Look at New York right now. New York has $2 to $3 million condos that are it is a buyer's market right now. It is completely a buyer's market right now. That's all over the country, except for some very small pockets. We see that in Florida. Florida has a seller's market still going on right now, but pretty much all over the rest of the nation, right, all over the rest of the nation, it is a more of a buyer's market that's going on. Called that absolutely correctly. Debt still at dangerous levels. Household income, which is still increasing. We still have spending. Now we do see that credit card debt is climbing, so we do have a lot of credit card debt that's climbing up right now, and that's actually a good and a bad sign. It means that people have confidence in what's going on with the economy. So we do see the our credit cards. We do see credit card debt still climbing, right? I gotta go and take a look at the car manufacturing, right? I want to see how this call turned out. Where I said the second quarter, we should see an uptick because of tax returns. What we didn't see is we saw that there wasn't like a big payback in tax returns for people. What happened is taxes are just not being taken out of people's checks, so they're getting money back slowly in increments. They're not getting it back in one big chunk. So I was not correct on that. So I did miss that one pretty good. And I don't think we saw a real bump in car manufacturing in quarter two. I still have to go and take a look at that. Quarter two 2019, since we are going into the end of 2019 now, I think I missed that one. The elections. So once again, we've got an election that's coming up. 2020 is an election year. It's already started here in the States, so we're already in an election year. We just started way earlier than usual. One of the things we've seen though is that it doesn't matter whoever the party in power is, that party in power is dumping money into the economy. And I just saw a chart the other day. I don't even know where to go find this, but if you get a chance, there's a chart. Let's see here. It's going to be Fed flood cash into the economy, right? So Fed flooding cash. Boy, I did that wrong. Flood cash into the economy, and there was a chart about it, right? It was definitely a chart I saw the other day. Where was that damn chart? God, I don't know where it was, right? But there's a chart somewhere on this where and this happens every single time, pre going into an election year. This always happens, right? So what happens is every time there's an election year, the whoever's in power, they flood money into the economy. It's artificially inflates the economy. It's what everybody does, right? It's just the thing to do, right? Everybody does it over and over and over again. All right. So with that being said, let's go ahead. Oh, these look at these, all great ones. We all know Canada folded on NAFTA. Mexico's folding on same thing. Mexico and Canada, both of them rolling over, belly up, like little dogs getting scratched on their bellies. Because the U.S. government just literally reached out and put the smackdown on all of them. China, looks at this was nailed. Look, China's stubborn, but the trade war will not last. Chinese economy is very weak, right? The long run, this helps the U.S. by balancing trade. The tariffs are brutal, and the cost of import has risen, right? So we've seen this drag out, though. Now, I want to say that, what do you consider short and what do you consider long? The Chinese game right here that they're playing is they were actually hoping that Trump was going to lose the next election. Now they're very risk adverse. Chinese people are very, very risk adverse. So what I see them doing is they're kind of throwing Trump a bone right now to, just so in case he wins, he just is not going to hit him with just a hammer of Thor. Like he's going to come down on him like Thor, and he's going to pound the living bejesus out of him. And he knows what they're doing. He completely knows what they're doing. He knows they're playing a game. He knows they're trying to play all nicey nice. Their goal is to push it off onto the next Joe Biden, to where they can just go in and do the typical, hey, I'll slide your son 180 G's a month. You know what I'm saying? Just dump all the tariffs. Everything is fine. Pull the whole Biden/Clinton kind of a thing, right? We're just kind of pay everybody off and move on, right? Everybody gets paid. Everybody's happy. And of course, the U.S. government loses out. Well, the U.S. people lose out, right? The U.S. is raising interest rates. So, we saw the U.S. government trying to raise interest rates. This completely has been derailed. This is something I don't like to see right now. What they're doing is we see quantitative easing going on right now. They're doing it proactively, where I still think we should be raising interest rates slowly. I don't really agree with this. I don't really like the fact that we're proactively pulling back interest rates while we're flooding the economy with money. I think it should just be the opposite. I think, listen, pick one or the other. Either you're going to flood the economy with money pre-election year, which always happens, and you can just start to you can just keep inching up the interest rates, because we know we're so long past due on the cycle to go into a bear cycle. We know we're super past due on that, right? Usually it's every 10 years, but right now, the way things are, I don't know if it was that we never had a recovery technically. So what does that mean? Usually in a boom and bust cycle, right? In a bull and bear market cycle, especially for the economy of 10 years, it's a good 10-year run, and then the bottom drops out. Good 10-year run, then the bottom drops out. I mean, can anybody really say here or in any country that there's been a really nice 10-year run anywhere? I just can't, man. I can't look at any one industry and say, wow, they just have been killing it for the last, 5 years or such not, or whatever. But I can't really look at anything. I can't look at housing. I can't look at, military contractors. I can't look at anything, right? And everybody thought that Trump was going to come into office and be this warmonger with his finger on the button. And, the military stocks were going to do really good. And we haven't seen that. I mean, yeah, they've dumped a bunch of money into the economy. They dumped a ton of money back into the armed forces. But honestly, without a war, that really doesn't go far in helping those companies out. It just doesn't, right? It's just not that good of a thing to help those companies out. And I think going forward, here's what I'm going to do. I'm going to do is write this whole thing down because I got to do a new one, right? So going forward, right? So where are we at? We're 2019 fourth quarter. All right. So we're 2019 fourth quarter right here. So let's start right here. So number one, every year when you have a good cycle, you get a pullback in the markets as people take. Let's get this over here. Right, Jesus Lord. See if that was enough. Yeah, there we go. Take profits to cover their tax liability. Right, so this just happens every third and fourth quarter. This usually happens, October, November. And I still expect this to happen. Now, what's different this time? Number one is we have not had. Hold on a second. Yep. Okay. It's an amazing run as we did from 2016 to 2018, right? We just didn't have this massive yee-hoo-wee, right? We just didn't have this massive run right here. So we've had a much more moderate run, right? We have had a much more moderate run. So I am still looking for a small pull, for a pullback back to reset for the next year. Right? I still see we're going to, pull back and before we go into the next year, right? Number two. Let's do number two. Going into an election year, the Gov usually floods the economy with easy cash. Right? Always makes the people vote in the same leaders, right? So that's, and I feel the same thing is going to happen here. The same thing. U.S. government's going to flood a bunch of money in the economy. They've been doing it already. Things I don't like, right? 3. I don't like that we are easing with the rates while dumping cash into the economy. Pick a damn team, right? One or the other. And I think we should be stabilizing rates and or ticking them up here as a deterrent for post-elections and a possible No, because I don't think we're going to have a possible for post-elections, right? For Chinese, right? Chinese trade war, right? So Chinese trade war. The Chinese are playing this safe here, and and throwing Trump a bone, just in case. In case he wins 2020, and I still think if he wins, he will hit the Chinese hard. I still think if he wins, he's gonna hit the Chinese hard. I mean, he's gonna go just like ham on them. I mean, I don't think there's anything else, right? I think he's gonna go hard on the Chinese. If he wins, he's gonna go hard on the Chinese. The Chinese are praying they get a Biden or weak Dem who wins so they can pull a Hunter. Everybody knows. Everybody understand what that is? A Hunter, right? Yeah, that's this is friends and family free cash. Right, that's what that is. That's the friends and family free cash. That's the win. That's what that is. It's the friends and family free cash. Let's see what else is going on. The U.S. economy is still strong. 5. U.S. economy is still strong here, and the world economy is still soft and a mess. All right, Brexit is still a pro for England and a con for the EU. Right? The world economy still is the danger flag for the U.S. economy. Right? The risk I see here is the world economy faltering and bringing and as a catalyst for a U.S. slowdown. The U.S. will be a capital flight zone for many of the world's rich as they hedge into the U.S. dollar. Six, gold. Almost hit my 1600, 1700 targets. I still see this as a target as we see China and India buying up massive quantities of gold. I am looking to buy some property with water rights. Rights here in the U.S. A very long-term investment. Jesus Christ, that's a lot. I'm gonna put this over here. I'm gonna put this stuff over here. It's all the old stuff. Here's all my new stuff. Man, can we break through that top right there is the question. Okay. Where would any pullback come back to? I think any pullback is going to be moderate. So pull back this here will be moderate. All right, and there we go. I'll do one on currencies tomorrow. I'm trying to keep these videos short, and there we go. Thank you, everybody. I am out.